Welcome to the podcast about venture capital, where investors and founders alike can learn how VCs make decisions and reach conviction. Your host is Nick Moran, and this is The Full Ratchet.
Welcome back to The Full Ratchet. On today's special segment of Investor Stories, the investors address trends, sectors, and markets that they think are positioned for outsized returns in the future. This is the segment called What's Next?
Today we have Nagraj Kashyap, managing partner at the SoftBank Vision Fund. Nagraj, can you talk about sectors or trends that you're bullish on?
I would say very bullish on, in general, what I would call e-com and e-com enablement. I think we've clearly seen over the last 2 years the shift towards e-com, but there's so low-hanging fruit, even on the e-com side, that is not digitally enabled yet. There's so much to be done in the infrastructure piece of it, having a frictionless experience for consumers who are now more and more shopping online, which then means they want experiences that match their desire to shop online and have less friction. We've done a couple of companies already. I think there's a company that we are really, bullish on in this space. We've done a bunch of companies, but I think all of them have this idea of the touch point to the consumer becomes frictionless, and you can then also intercept consumers where they are instead of forcing them to go a specific place. And it's also not just the pre-purchase experience, the post-purchase experience. A company like Extend, which does product warranty, like how do you fix a very, very broken process and giving peace of mind to consumers when they're doing large purchases? That whole process has been broken. I think Extend has done a great job of taking consumer-first mindset. And that's another one where I think my consumer, enterprise, and software teams all came together as well. And this is a company with enterprise-like contracts, but with the consumer touch point and differentiation using software. So I think I try to look for this kind of convergence, and we are seeing a lot of convergence. We won't have what I would call consumer and fintech and e-com as separate categories. They're all blending together. Toast is a great example of a company that sort of came out, and is it a software company or a fintech company? Really, they've got both things really lined up. And that is a little bit of the new model which will emerge, is actually already emerging, where these things blend together. And you have to be good at a number of different aspects on the consumer or SMB journey. I think those are things we're very bullish on.
How do you handle a situation where the startup is building a product that could be very complementary to a platform like Shopify, but Shopify could also, build it in-house and may have an incentive to do that? How do you think through those?
Yeah, I think, again, great question. I think, by the way, this is the same question you ask is, am I doing an enterprise software startup that Microsoft could do or Oracle could do or anybody else in that could do? And it's actually the same question. Most times VCs will take bets on a startup because of focus. And I think if it's not a large enough problem area for a Shopify or a Microsoft or all, they will take their time to get it done because they're also running a pretty large business of their own. So theoretically, any of these companies could at any time build or buy, partner a company that you're in the area you're doing. But it's always been the case, for the most part, that they have so many other priorities that the startup will outmaneuver them for this path they're taking, not for the entire platform, but they're able to build a big enough business that at some point, any of these companies will either partner or buy. That's been a very, I would say, tried and tested path in VC to be backing companies that are very focused because they've figured out a pain point that the larger platforms, it's not a big pain point for them today. It might be in 2-3 years, and they've got so many other priorities.
On today's special segment, we have Matt Cohen of Ripple Ventures. Matt, can you talk about sectors or trends that you're bullish on?
Absolutely. You can see it in our portfolio. We're extremely bullish on logistics and supply chain with our investments in Rocket and Tread. We love, companies in the low code, no code space. So like VoiceFlow, we've been a huge supporter of them from day one. They're one of the leaders in the conversational design and AI space and voice technology, as well as in the marketing space. So we've got investments in Marpipe and Aptio. given what's going on in Facebook recently, it's becoming more and more important to find companies that can provide solutions to help, D2C brands and consumer brands get more bang for their buck on their ROAS. And there's companies like Marpipe and Aptio that are helping do that with sophisticated technology and AI solutions that, currently are available. Just people weren't really paying attention to them until this Facebook stuff happened with Meta. So we're really excited about that. And then continuing down into the, Web3 space, I already spoke about that, but we're excited about investing in the infrastructure layer of Web3 companies in the future.
On today's special segment, we have Jenny Stojkovic. Jenny, can you talk about trends in food tech that you're bullish on?
I am very bullish, as I said, on alternative proteins that are underserved right now. So I'm super, super interested in seafood, very interested even in chicken. There's also some like exotic meats that have no other comparables right now, especially over in Asia, where there's mass consumption of things like specialty seafood, sea cucumbers, and things like that. Nobody's tackling them, even though they have huge, huge market cap and huge opportunity there. I'm also really bullish on the future of, women's tech, feminine tech. There's so many different products that are yet to come out to solve some of the issues that women are facing across their entire lifespan, including both pregnancy all the way to menopause. Huge, huge opportunity there. Huge opportunity for babies as well. Infant and toddler nutrition is really exciting me at the moment.
On this special segment, we have Jed Cairo of Juxtaposed. Jed, can you talk about sectors or trends that you're bullish on?
Yeah, we've been spending a lot of time thinking about the future of healthcare, and in a small way, think that we're helping catalyze a couple mega trends that are important as we think about the healthcare industry in the US over the next 20 years. One of those trends relates to consumerization. We've built a number of businesses that bring personalization, that bring technology tools, that bring experience design from outside healthcare into healthcare, with a belief that people are both interested in and in a lot of ways forced to be more proactive and responsible for their healthcare decisions, and that the companies that will be successful in a world with that consumer paradigm will speak consumer really well, which has not historically been a strength of the enterprise healthcare world. I would bucket that theme as various flavors of more preventative oriented healthcare, generally with younger and healthier populations. The other theme that we've spent a lot of time on relates to incentive alignment within healthcare and trying to be supportive of emerging models throughout healthcare that align the incentives of patients and payers and clinicians in delivering better healthcare outcomes as well as better value. And there are case studies that abound related to these various types of risk-bearing models. But what's so amazing and so appealing about them is how virtuous they are. There's an opportunity to meaningfully impact the lives of patients, provide them much better care, and do so in a way that leads to both profitable enterprises and in many cases saves the government money. And so you have broad bipartisan political support and a lot of ecosystem support for these new and more efficient models, and the role that can be played by technology, by data, by more purpose-built operations is powerful, and as such creates a very ripe environment for disruptors, where you have a meaningful benefit from the clean sheet of paper competing against incumbents who are saddled with existing technology, clinical models, real estate footprints, legacy cost structures, et cetera, and makes wholesale change more difficult.
That will conclude this installment of Investor Stories. If you're enjoying the program and would like to see it continue, take a moment and leave a 5-star review in iTunes. Also, if you'd like updates on new content from TFR, as well as the top 10 VC articles every week, go to fullratchet.net and sign up for the newsletter. Okay, that will wrap things up for today. Until next time, over-prepare, choose carefully, and invest confidently. Thanks for joining me.